18 minutes to go until the closing bell. Stocks under pressure. All three of the major averages in the red right now. Dow off just around 100 points. S&P off about 0.5%, and the Nasdaq off 0.6%. You see the Nasdaq, the underperformer today. Sector-wise, energy, financials, and industrials are the big three underperformers in today's market. We want to bring in Chris Osmond. He's the Chief Investment Officer at Prime Capital Investment Advisors. And Chris, taking a look at the selling pressure today, we were just talking about that weaker than expected retail sales report. Is that what's contributing to this decline, or is there something else also going on?
I think that's part of it. I think the other part has to do on the heels of President-elect Joe Biden's announcement of his fiscal stimulus plans as once he takes office. I think that's also contributing.
Chris, I really appreciated when you advise your clients that tech's not dead. When I read that, I was thinking of the old Monty Python thing, "Brad, you're dead. I'm not dead yet." But when you say that not all tech is created equal, how do I mean, I'm just an average investor, and this is the case for professionals like yourself. How do I differentiate between the behemoths like Apple and those where, finding the value in those that we don't pay attention to on a daily basis?
Yeah, I think the secret is really focusing on those companies that have an historical track record of delivering consistent, predictable earnings, and that really highlight those themes that we saw really start to take a more longer-term secular, taking advantage of the long-term secular trends in the market, and that's that race towards digitization. These themes around artificial intelligence, around machine learning and e-commerce, these were prevalent before COVID, highlighted during COVID, and even accelerated, and they'll exist long beyond COVID. So I think finding those companies is going to be critical.
Chris, one thing that I want to bring up here, the IPO action that we saw this week. We had Affirm 2 days ago. Yesterday, we had Poshmark and Petco. All three of those stocks soaring on their public debuts. Does this worry you at all, just in terms of the frothiness in the market and what this could potentially mean going forward?
It does. I think that you're seeing a lot of euphoria in the market. There's this disconnect between Main Street and Wall Street, highlighted by the December jobs report, highlighted by the spike in unemployment claims yesterday, highlighted by the weaker than expected retail sales today. But the market seems to be overlooking that, all pinning its hopes on vaccine optimism and around that rollout, as well as a second, or I should say a third stimulus check, which they hope to see soon.
Chris, we had a guest on in the first part of the hour talking about banks and, very down on Citibank, which rhymes with another word, and Wells Fargo. Not so much down on JP Morgan, but not an advocate. And yet we keep hearing from other analysts, banks, banks, banks. What do you say as we go through the rest of the year with the banks?
Well, I think it's you hear a lot about what's different this time around, but history has an odd way of repeating itself. And typically coming out of a recession, you see those more value-oriented or cyclical sectors like financials, energy, material, and industrials really perform well. Now, they're all appear overbought based off their relative strength index over the last 14 days and look a little vulnerable right now as earnings announcements come out. Looking at banks in particular, I think that it's important to look at those that are diversified. You look at JP Morgan and they're diversified. They have asset management, trading, in addition to the banking services. Those banks that are focused solely on banking rely heavily on the yield curve. And my preference is to avoid those individually and look for more diversified banking institutions.
Chris, how about the inflation debate that's going on right now in the market, whether or not we're actually going to see it play out this year? What do you think the market's anticipating?
Well, the market's definitely anticipating this reflation trade. I think that part of the reason we're seeing a little pause today is some of the resistance the proposed Biden stimulus plan may get in pushing it through quickly. And that's putting a little bit of pause on this reflation trade. Ultimately, I think that the market is pricing in more inflation than we'll potentially see over the course of the year. But there is that concern, given the pent-up consumer demand and amount of fiscal stimulus that is being pumped into the economy, as well as the monetary stimulus, that in the second half of the year, we could see inflation spike more than expected. But I don't think to the tune that the market's currently pricing in.
All right, Chris Osmond of Prime Capital Investment Advisors, thanks for joining us.